Hi, today we'll discuss Ind-AS 1 presentation on financial statements. We'll discuss the Ind-AS 1 presentation on financial statements. So the first point is elements of financial statements. The elements of financial statements are asset, liability, equity, income, expenditures. The second point is components of financial statements. So components of financial statements are balance sheet, P&L, cash flow, SOCI, and notes to accounts. To prepare general purpose financial statements, uh, comparability with entities' own financial statements of previous years and with financial statements of other entities, overall requirements for presentation of financial statements, guidelines for their structure, minimum requirements for their contents. Scope applies to standalone, consolidated, and interim financial statements. Ind-AS prescribed under Section 133 of the Companies Act. Materiality and information is material if omitting, misstating, or obscuring could reasonably affect the decisions of the primary users of the financial statements, which the users make on the basis of the financial statements. Comparative information, a balance sheet at the beginning of the earliest comparative period. Ind-AS 1 and Ind-AS 8 states that third balance sheet is to be given when there is a prior period error. Collect the error and state the impact on the opening. When there is a change in the accounting policy, example FIFO to weighted average, then third balance sheet is to be given. When there is a major reclassification in sundry creditors or advances, third balance sheet is to be given. Point number 8, 9, 10 require a retrospective restatement. Uh, A Limited purchased a machinery of 1 lakh on 1st April 2016, having a useful life of 10 years. The accountant passed a wrong entry of assets of 10,000 instead of rupees 1 lakh. The error was found in the financial statements of A Limited in 2021. Suggest the correct treatment in light of Ind-AS 1 and Ind-AS 8. Cost of machinery 1 lakh. Machinery understated by 90,000 and bank overstated by 90,000. Asset cost 1 lakh, incorrect cost 10,000. Depreciation based on incorrect cost 2016-17 cost 10,000. Depreciation 1,000. WDV 9,000. 17-18 9,000. Depreciation 1,000 and WDV 8,000. 18-19 cost 8,000. Depreciation 1,000 and WDV 7,000. In 1920, 7,000 minus 1,000, 6,000. Hence, for 18, 19, 19, 20, 21, 2021 balance sheet to be given. Actual was 10,000, depreciation is 3,000, written down value is 7,000, revised is value is 1 lakh, depreciation is 30,000, written down value is 70,000. Machinery has to be debited with 63,000. Retained earnings has to be debited with 27,000, which is a balancing figure, and to bank, which is to be credited with 90,000. Depreciation for 1920 asset value 70,000 divided by 7, 10,000. Depreciation to machinery 10,000. General features and overall consideration. True and fair view of compliance with Ind-AS. Explicit and unreserved compliance to Ind-AS. Going concern accounts have to be prepared on the basis of going concern, accrual basis, aggregation and materiality, offsetting, frequency of reporting, comparative information, consistency of presentation. In extremely rare circumstances where compliance with the standard would be misleading and it would conflict the objective of set out in the framework, the departure is permissible, but this specified disclosure is required. An entity is engaged in a plastic product manufacturing in a particular area. The entity is profitable entity and has huge orders at hand. As 31st March 2020, the government has announced a ban on the trading of plastic product after 39 2020. Advice on the company on the going concern as per Ind-AS 1. In this case, neither the company has ceased trading nor the management intends to liquidate that entity, but there is no alternative to do so in light of government announcement. Hence, there is an impact on going concern. accrual basis. Transactions and events are to be recognized in the periods to which they relate. Consistency, presentation, and classification is retained. Materiality and aggregation. Material present separately, immaterial aggregate with other items. Offsetting assets, liabilities, income expenses shall not be offset unless required or permitted. Revenue is recognized after offsetting trade discounts and volume discounts. Same is allowed as per Ind-AS. Information required in financial statements. Name and change, if any, individual or group, period covered, currency, level of rounding off. If line item in balance sheet does not have a value, then it is not to be disclosed. It needs to be disclosed as a value in the current year or previous year. ABC Limited took a loan of rupees 1 lakh. The loan is due in 24 months. ABC Limited makes a default before 31st March 20, but they rectified the default before 31st March 2020. Advised treatment under IFRS and Ind-AS. IFRS, it will be treated as a current liability, non-adjusting event, and in Ind-AS, it will be non-current liability, adjusting event. Structure of P&L: revenue from operations, other income, employee benefit expense, other expense, impairment, depreciation, finance cost, profit before tax, extraordinary items not allowed as per Ind-AS or IFRS. Example: loss due to fire, loss due to embezzlement. Exceptional items allowed as per Ind-AS and IFRS. Example: ordinary in nature but exceptional in quantum, but then it becomes exceptional items. Under Ind-AS, the comparative needs to be given for 3 periods: profit before tax, tax expense, current tax, deferred tax, profit after tax, part 1 till PAT. OCI, P&L appropriation account cannot be distributed as dividend. Example of OCI: revaluation of fixed asset, actuarial valuation of gratuity, MTM of equity and debt instruments. Share of OCI in associates in JV and to the extent not classified to be classified to P&L. PAT plus OCI is total comprehensive income. SOCI to be given changes in OCI. The objective of Ind-AS is to prescribe the basis for disclosure of accounting policies. Presentation and disclosure of general purpose financial statements. Presentation of general purpose financial statements. Disclosure of general purpose financial statements. Presentation of general purpose financial statements is the answer. Does the complete set of financial statements as per Ind-AS include notes to accounts? Yes, no, it depends on entity's choice. Answer is yes. Name the 2 components of financial statements under Ind-AS. New components. So first is the SOCI, statement of financial position. SOCI and OCI is the answer. Ind-AS is not fully applicable to balance sheet, P&L, SOCI, interim financial statements. Answer is interim financial statements. Ind-AS does not prescribe the accounting policy, guidelines for the balance sheet, guidelines for the statement of changes in equity, guidelines for the statement of P&L. Answer 5A: prescribe the accounting policies. Which of the following is not required to be presented as minimum information on the face of the balance sheet as per Ind-AS 1? Investment property, investments accounted for under equity method, biological assets, contingent liability. Answer is contingent liability 60. Which of the following is not specifically required disclosure of Ind-AS 1? Name of the reporting entity and other means of identification, change in information from the previous year, names of the major significant shareholders of the entity, level of rounding off, whether financial statements of individual or group. Names of major significant shareholder of the entity is not required. Which of the following reports is not component of financial statements according to Ind-AS 1? Balance sheet, SOCI, director's report, notes to financial accounts. Answer is director's report. Director's report is not a component. An entity whose financial statements comply with Ind-AS shall make an dash statement of such compliance in the notes explicit and reserved, implicit and unreserved, explicit and unreserved, implicit and reserved. So answer is explicit and unreserved compliance to Ind-AS. So this comes to an end of the chapter. Please like, subscribe to the channel. Thank you.